What is an international student loan? Federal student loans are popular with US students studying in the US, but they are not available to international students. Instead, international students are eligible for international student loans, specialized private education loans available to international students in the US. International student loans are now a very realistic way to finance your education in the US. Loans are very flexible and can offer loan amounts high enough to pay for your entire education, but with extended repayment terms and reasonable interest rates, so you can afford the repayment after you graduate. Consigners. Most international students applying for loans must have a US consignor in order to apply. A consignor is legally obligated to repay the loan. If the borrower fails to pay, the consignor must be a permanent US resident with good credit who has lived in the US for the past 2 years. The consignor is often a close friend or relative who can assist in getting credit, since most international students cannot receive credit on their own. If you are not able to find a consignor, see if there are no consignor loans available to you. Interest Interest is the additional amount charged by a lender on top of the principal amount that has been borrowed. The interest rate is computed using a benchmark rate plus a margin, with the margin being contingent on the credit worthiness of the borrower or their cosigner. Two widespread benchmarks utilized for determining the interest rate for international students include the prime rate and the SOFR (Secured Overnight Financing Rate). Prime interest rate: this benchmark is influenced by the federal funds rate, which is established by the US Federal Reserve, serves as basis for lending rates in the market, and is often utilized in the calculation of interest for loans provided to individual borrowers and businesses. SOFR: the SOFR (Secured Overnight Financing Rate) is an interest rate benchmark that is administered by the Federal Reserve Bank of New York. This benchmark is based on the transactions in the Treasury repurchase market, where banks and investors borrow or loan Treasuries overnight. As a risk-free overnight funding rate, SOFR includes data from a wide range of market